Okay, today I'm just going to give you a quick update on the S&P timing cycles, and then I might also show you something in the short term. But one of the things you have to remember is that when I do timing work, it's always plus or minus a bar of the timing. And since this is a weekly chart, it's plus or minus a week. So with the cycles that all came due the weeks ending the 13th and the 20th, that means that the last week that we could look at for this to be a hit as far as timing is the week ending the 27th, which was last week. So we're still within the time window for a high to develop. We're still up at extensions where moves tend to terminate. Okay, and also if you look at the weekly continuous chart in S&P futures, let's see if I can find that chart for you. You'll see that the most recent high was also made at an extension of this prior major high-low swing. Okay, so yes, there's time and price resistance there, but does this mean that we're definitely going to have a major high here where we're going to see a decline that's similar to this? And the answer is no. We don't know for sure. We just know that there's time and price resistance here, and that you can define risk against that if you're looking at counter trend trades on the short side. But what I also want to share with you is that if you look at, for example, the daily chart of the S&P, this is just a normal pullback. Okay, yes, we're declining from resistance and timing, but you're not breaking the back of the market. You're still clearly above the 200 simple, you're still clearly above the 50. And as far as one of the averages that I like to look at, I look at the 5 and 13 EMAs on the daily chart. And for the most part, we're still looking at the 5 above the 13. Okay, so have we broken the back of the market? No. Could we potentially see more on the downside? The answer is yes, but you still have to watch the support on these pullbacks. And the next area that's pretty important, well, we're above it at this point. But the area I'm going to focus on is this 2254 to 58 area, which also comes in above an important prior swing low at 2248.5. So this is still an area to look at for a potential resumption of the rally. You might not get it, but you have to watch for it. Why? Because you're still looking at a bullish pattern here. You're still respecting the key moving averages as far as the ones that we look at for the bulls. And unless we break underneath this area, I'm actually not that concerned about this pullback. This is a natural pullback that typically occurs when you get up towards extensions of prior swings. Okay, so this is your next immediate decision. The 54-58 area, if we can hold above here, do not be surprised if we resume the rally and make a new high. Okay, but if we end up taking out that support plus taking out this low, then I start to believe that we could be putting in a more important high against those parameters that I've given you in the past here.